day at the chart, a sea of red, talking puts and calls, but they just stare ahead. Strike price means nothing in their black minds. Margins and leverage like mountains to climb.
Let's go to your watch list back up to the top. You can see, oh, no, your watch list. What did you do? Go back to positions.
Like that?
Go back to positions. Scroll the watch list back to the top. There you
It
go.
was at the top.
No, it wasn't.
Oh.
All right. So today is 10/31/2025. We've got the NASDAQ up 270 points. The S&P's up about 40. Russell up 13 and the Dow up 70. VIX futures are ticking higher. We've got gold up on the day slightly, silver down slightly, small days for both of them. And then Ethereum and Bitcoin both up pretty big on the day. What else? That's about it. We got crude oil up slightly. Yeah, same thing with natural gas. Basically, everything was down yesterday until the earnings came out after market, and that pulled the markets back up. So this Apple trade, you can see you're up on the day in Apple. Go ahead and open that up. This is getting to the point where it's now it's profitable. So you see how there was some shares. So going into the earnings yesterday, I did two things. We had the 250 put strike and the 285 call strike. I got a little nervous towards the end of the day, so I actually rolled those out a little further to the 245 and the 290. Give yourself $5 more in room to each side. Turns out it wasn't necessary. You probably would have made more money if I didn't do that, but I saw Amazon's earnings come out and Amazon went kind of ballistic, and that made me think, well, if this gets some momentum, which it did. So I bought some shares too. I bought, I think, 10 total shares right around the current price, but overnight it rallied up to almost 280, and I sold out of those shares at that point. So the shares made you about $70. So this position's still not quite back into profit if I hadn't bought those shares. So I guess you could leave this. You're still really far away from your strikes. It's got 21 days to go in here. Earnings are over with. You could either close it and move on, take that capital off, or just leave it for a few more days and try and squeeze another like 20, $30 out of here. But if you go in and click on it and go into details, do Apple details, you see this IV percentile?
Yeah.
That IV percentile is down to 15. So not really a great thing to be sitting in short premium in here. So I wouldn't roll it out to the next month. If anything, I would either close it or just leave it for a few more days. But I wouldn't roll it out. I'd be looking at trying to work your way out of this position until this IV rank gets a little bit higher. So go back to positions. Archer up on the day. Up on the day, still down overall, $32. I don't think we touched that. I think we let that go. AG down small. You're still pretty much in the same spot in there. Let's let that continue to work. Angel Studios still down. It's down every day, it seems like. It's okay though. I accidentally did something in here. I thought I did it in my account, but I guess I put it in yours. You see here where you now have 3 December short puts.
Mm-hmm.
Yeah, I meant to put those into my account. My bad, but I wouldn't be worried about it. Basically, you sold them for 175. For what is that? 750 minus a buck is 650 minus $2 is 550 plus 25 cents is 575 is basically where you're agreeing to buy the stock at. It's still not even to that point. So I just let that sit. Applied, it was rallying today. You're making a little bit more back today. I think you're pretty much flat delta overall in there. You don't really have much delta left. Yeah, 6 delta. So most of your potential money to be made in here is in this premium right here. So not really anything I would do in there either. You got about 21 days left to go in all these contracts that are in November.
Mm-hmm.
Yeah. Let's let them tick down like another week or so and see where we're sitting at then. Webull, it's up tiny on the day, but it's really not moving. I don't think we're going to see anything really happen in here until earnings. So we still have like 2 weeks until earnings in there. MP down again. You're really getting paid a good amount on this call. They took a whole $1 out of it just today. You only have $1.50 left in there, but there's really not much else you can do in here without going inverted on this. I don't think you go inverted yet. This one again, I think you just kind of let it go. MU, this one rallied. it closed yesterday somewhere around 225 or so. It rallied up to 230 overnight. It's given back about $1.50 or so. You're really not sitting in a bad position in here. Your P&L is down $300, but you still have over 800 and almost $900 in premium left in here. I don't dislike the current positions that you have on in here, so I don't know that I would change much in there either. And Nvidia again is paying you yet again today. It paid you yesterday, quite a decent amount yesterday actually, and then today it's the premiums coming in there as well. Actually, the premium, you're down on the premium. You're actually up on the shares. But overall you're up on the day in there. I did make a pretty decent adjustment last night in your, not in Nvidia, but in the Russell. So you'll see that I bought back so basically I did this into a down move. So we had a pretty big down move yesterday. I thought it was a little overextended. So what I did is I bought back the 2400 and rolled up to the 2450, and that worked wonderfully because we got a little bit of a bounce here. So you could either leave that, or if you want to take your risk back out to that 2400, either of those would be acceptable. I'd say you just leave it where it is for now. It is giving you a lot of long delta, but I wouldn't be surprised if we see the Russell work its way back up above 2500, and this will put you in a better position for that. So basically in the Russell, you can see your P&L is now up to $735. So it's had a swing from down $1,700 to up $700. So what is that? About $2,500 range in this product so far. And we've only had it on for a couple weeks. I say just leave it. Gold. I accidentally put this trade on in your account as well. I was trying to put on in my account last night. So I was trying to scalp some gold futures and didn't realize that this was not my account. But basically I made you $75. So you're welcome. And Snap I wouldn't change. I wouldn't really change anything. If there was one thing that I would close, it would be Apple, or I would be looking to close in the very near future. What you could do in Apple is, what's your delta in here? You're probably still short delta. You could flatten your delta out in here now and roll your put up to get a little bit more credit on that. Get yourself back in line, because show Apple details. What do you get if you go from the 145 up to like the 155 or the 150? I'm sorry, the 245 up to like the, what do you get in credit if you take that up to the 250? It's about 30 cents.
Yeah.
29 cents. I don't think that's even worth it, honestly. And I don't know that you want to go all the way up to the 255, because that would lean you long in there. No, I think you just leave it. So really there's nothing. I kind of was hoping that you would be up a little bit more in Apple today so we could take that off. But until we get some of these positions off, we also don't want to put new positions on. But I will show you kind of what I wanted to do in bonds. So go to TLT.
What?
TLT.
Oh.
This is Treasuries, and it's an ETF, so it's an equity product. So what I wanted to do in here is show you a strategy that's basically a stock replacement strategy, and it's a different way to handle a poor man's covered call. So like a poor man's covered call is going far out in time, buying a deep in the money call. So go to like the January of 27.
27? Oh.
Yeah.
Wait.
400 days.
400 days.
Yeah. So then you would buy like two. So a normal covered call, you would go to like the 80 delta option, 80 delta call. So you're going to be in the money on the call side. Where's your deltas?
Right there.
Right there. So you're 80. So you'd be there either at the 75 or the 80. So you would just buy that, and then in the near dated cycle, you would you would go to your 50-day expiration and you would sell an out of the money call against it. So go to like your December of this year.
Oh,
So 49 days left to go. Yeah. And then you would go back up to, yeah, there you go. Then you would sell something out of the money against it. So like go to your 92 calls or your 93 calls, somewhere around there, 92 or 93, you would sell. So then look at the width of this. This is $12 wide. You're paying $10 for it, right? It's a bullish position. That long in the money call is going to behave as if it were 80 shares of stock. So it's basically owning the stock and selling this call against it. That's going to behave just like your Palladium position where you do have 100 shares of stock, but instead of paying $9,000 for this stock, this is going to cost you what, $1,000? And yeah, so it's going to cost you $1,000, and for $1,000 or $1,100 basically, you're going to be able to keep this position on and keep this exposure that is going to behave just like an $8,000 or $9,000 position for the next 440 days. And as you go through time, this December contract is in 50 days is going to be worthless, or it's going to be in the money, one or the other. And then when you get closer to that time frame, you just continue to treat this short call as if you had the stock, and you're going to adjust the call just like we did in Palladium.
okay.
But I don't think we put this on right now. And there's another way that you can get that 100 shares of long delta using option contracts that will basically mimic exactly 100 shares and give you no extrinsic value. But with you only having $6,000 available in your account right now, we need to get some of these positions off. I think Tesla was doing well for you today, but it still hasn't really gotten below this $5.20 or whatever it's worth. How much is left in that Tesla put? Yeah, 530. So it's still not quite to 50% of your max profit. So I think there's still more to come out of there. Tesla's having another really good day. But I mean, you were down a couple of days this week, pretty good. You've made all that money back. We're basically just trying to wait for some of this premium to pay us. And it is going in the right direction now. I think you still have another probably $800 to $1,000 in here that needs to come out before you really start to aggressively take some of these positions off. I don't think we do anything today. I mean, sometimes that's all there is to it. You just don't do anything. You want to go over the terminology again? Like in the money, out of the money? Theta, delta?
I remember in the money, out of the money. So like,
So like with your Apple positions, what are those contracts? Which are in the money and which are out of the money?
isn't the call in the money? No, call's out of the money. And the put is the put also out of the money?
Yes, they're both out of the money. What about with applied?
Mhm. The put's out of the money. And the call is in the money. No.
Yes.
It is? Oh, yeah, it's
Yeah,
above.
it's in the, yeah, because it's 34 cents above your strike. And then an MP,
It's out of the money.
which is out of the money.
Call. And the put's also out of the money.
No, the put is very, very deep in the money. Because look, it's saying you're going to buy it at 75. The thing's trading at 62. So it's deep, deep in the money. So it's behaving like 100 shares of stock. I bet you it's got like a 90 delta. Just the put.
Oh.
Wow, it's not even. There's still a lot of premium left in that then. Being that deep in the money, only having 60 delta, that means there must be a lot of extrinsic value in that still. Go back to it. What's it trading for? Go back to it. What's it trading for? So $17 and you got to buy it at 75. 75 minus 62 is what? 13? Yeah, 60 or 12 and a half. So yeah, 12 and a half, 17 minus 12 and a half. It still has $4.50 in extrinsic value left in there that needs to come out. I thought it would have been closer to pure intrinsic value. We'll go over those terms, extrinsic and intrinsic, on the next episode. But those are the two different types of values that make up your premium contract. Like the premium in your contract is either made up of extrinsic value, which is basically any contract that's out of the money is pure extrinsic value. It has intrinsically no value based on the price of the stock, because in order for it to have value, all of that value comes from time and future potential movement. Whereas intrinsic value with a position like MP where we're deep in the money. So this put right here, go back to the MP. You go back to where I can see how much it's worth, the price of it. So this $17 with this thing trading, say we're exactly at 62.50. With this thing trading at 62.50, this contract is made up of $12.50 of intrinsic value and $4.50 of extrinsic value. So the intrinsic value is the in the moneyness, basically, how far in the money it is. And right now it's $12.50 in the money. The extrinsic value is the time premium and volatility that's baked into that contract. So it's where that theta is coming from the extrinsic value. So if this had zero extrinsic value in it, your theta would be practically nothing. But because it still has $4.50 in extrinsic value, you're still going to have a decent amount of theta in this contract that's going to come out. But we'll use those terms more as we go. Look at that. You're making more money here. What are you up to? 660. What's printing? What's your palladium is kind of flat today. I was hoping that would have another strong day. Nope. Bummer. I don't know what's making you money, but something is. Because your P&L is going up. That's all I got.
All right.
Do you have any other questions about anything?
No.
Nothing.
Okay, we're good.
All right. Well, kind of a boring day, but boring days are good. As you can see, you're just printing money and you don't really need to adjust anything. So, c'est la vie. All right. Thanks for watching, everybody. Don't forget to like and subscribe and do all that fun stuff. We will see you on Monday.
Faces blank as empty streets, hedging positions, but the questions repeat. Time decay means nothing to the young souls in this marketplace. It's like digging holes. Iron condor flies, but it never lands. They can't grasp the feel of these trade winds. Liquidity tide choking on the sand. Profits and losses, they'd rather go play bands. Candles rise and fall. Risk and reward, it's a game of all or no. Options open, futures closed, eyes blind. Frustrated fathers dream in the stock grind. stop crying.